So today we're going to go through GAN's earnings. Many of you guys have requested for me to cover this and we'll go through this today. At the moment, GAN, as it normally does, is down off earnings. It's down over 20%. It normally happens. I don't think I can remember a time where GAN's earnings is not down 20%. And obviously what happens with GAN, it always seems to get dumped on earnings. Sometimes it does recover that through the day. Right now it's currently down 25%, but by the time you guys see this, it might have changed, but it's a normal process here. So I personally never look at what the share price is doing with GAN after earnings, because it always seems to be negative. Seems to be a bit of a targeted stock, but that's just me kind of jump into things there. But yeah, we'll go through some of the earnings. There were some good things in there, there's some bad things in there, and we'll cover it all for you guys today. So GAN, at the moment there was an EPS miss, but it was a goodwill impairment charge, which is important to know, and that does not affect the balance sheet at all. Some people get confused by that. So that was a miss on the EPS, but it wasn't comparable. There was a revenue miss as well. The revenue miss wasn't too bad. It was expected to be a slower growth quarter, but I think the expectations was 5%, but it actually grew at 2%. So it wasn't a huge miss, but it was a little bit of a miss. And that comes off the Q1 as well, which was a pretty good Q1, and that was a really good beat on the Q1, but Q2 obviously was a little bit disappointing. So I think the first thing is, obviously with GAN, one of the main things is looking at, even though the business has been, and management have basically come out and said, look, profitability is the key for us going forward. We do want to see this revenue growth still moving very much in the right direction going forward. So first thing is to dig into what happened there. Why did GAN miss that revenue? Is there something to be worried about here? So there's a few things. First of all, Q2 2021, when we go on comparisons, was amazing. If any of you guys were a shareholder or remember previously to 12 months ago, it was an absolute smash. The outlook was increased, revenue was an absolute huge beast. And a lot of that became because of, there was two events. There was the Euros, which is very key because as well as that, that means it's actually quite popular in like America right now. But as well as that, you've got the Coolbet acquisition, and the Coolbet acquisition is in Europe, or it has a lot of places in Europe, and that obviously drives excitement to people using GAN's platform, Coolbet platform, and that gave them a lot of success. And also the other thing is Coolbet was expanding quite a bit into like Latin America. And also there was the Copa America going on at the time. So two major events. Now them two major events haven't repeated this year. The events aren't on this year. So that was a really big driver to really hard comparisons from what they had last year. But don't forget that this is going to be made up, because in the back end of the year, we're going to have the World Cup, which should be a very good driver, a big catalyst in the back end of the year. So even though we suffered a little bit from Q2, that will be more than made up in the back end with Q4. Also, foreign exchange, the dollar, it's so strong at the moment, and that also has caused quite a few problems. And you probably have heard this mentioned with a few businesses, that actually had a 2.7 million impact compared to last year. So actually when you take that into consideration and we get rid of that 2.7 million impact, it was actually 8.6% growth, and that is actually really impressive because that is obviously great growth on hard comparisons, and also is ahead of analyst expectations, and that is really key. Another impact was the hold rate. The hold rate went from 9.7% last year down to 7%, so that's a big drop off. Why was the hold rate a big drop off? Well, in my opinion, the reason why is because you had Euros and Copa America, football. Football is a very interesting sport to be betting on because there's a lot of outcomes in football. You can have very easy, the underdogs win. You can have three different outcomes. You can have a win, a lose, and a draw, which is very different to a lot of other sports. And that normally means that gives, in my opinion, a very good hold. And I think that is one thing that helped the hold from 12 months ago. So the hold had a little bit of a drop off. That will fluctuate from time to time. Now, if you take the hold out of the equation, that was a 4.2 million hit. And that, if we take the hold back up to, if it was 9.7%, that would actually be 12% growth this year, which is insanely good on this quarter. And the thing is, if you put together these two issues, the foreign exchange rates, if we take away the hold, that would actually mean that this quarter, without the Euros and the Copa America, would have been 20% growth, which is very, very impressive on this quarter. So I know there's a few ifs and buts there, but it is really important to point out these two factors that really did affect the business massive amounts. And you consider just slight improvement, which probably will equal itself out over a longer period of time, means this company was actually putting in really good amounts of numbers here. And those are three issues here that obviously tough comps, tournaments, sporting events to be betting on, the FX and the whole, three major catalysts there that haven't worked in their favour, and that's something that GAN unfortunately can't control. The one thing that they did point to was Ontario. Ontario didn't deliver as much as what they were hoping for, which did not surprise me because when I listened to DraftKings, which is a stock that I own in a very similar area, they basically came out and said, look, Ontario's going to be really hard to crack. Like, there's a lot of established players in there. It's not going to be our normal market share compared to somewhere in the US. And I think with the partner in Ontario, which I think is FanDuel, then that obviously they haven't had as much success in Ontario, and that's obviously affected them. All kind of makes sense. It's a very tough area to crack into. I think they went for a little bit higher numbers and hoping for a bit more market share than what they did get from there. So I think that is a little bit of bad assumptions from management there. So I think that's probably one of the weak things, is that they judged that wrong. But like I said, you can see the major catalysts out of their control that really did affect them here, with the FX and having the Euro and Copa America helping them. But when you do take that out of consideration, volume was still up 40%. So people are massively still growing and using this platform. So no worries about demand or losing demand here. There's still a demand there and demand growing to use the platform. It's just there was a lot of things out of control that you can't manage that happened. And I think over long term that will balance it out and probably will benefit other quarters in the future. So when you look at the revenue side of it, sure, it was a little bit disappointing. But when you look and dig into the numbers, it was actually a pretty solid quarter. Not that makes up for it, not that kind of justifies it or absolutely amazing, but I think you've really got to consider this. EBITDA was positive once again. They are going to be cash flow positive by Q4. So, one of the key things that we've been hoping to see from GAN is that they achieve profitability this year, and it looks like they could achieve that in Q4, and then that should lead into 23, and 23 being a very positive year as well. So the main aim for this year is to still hold decent growth and still have or move to that profitability. Looks like we're still very much on track for that this year. There was an outlook cut. It wasn't the biggest cut that I've seen, but it did move adjusted EBITDA down. I think it was 5 million. I think the revenue did move down, I think 10%. I think that's taken into consideration that they're going to think that obviously the FX is still going to be pretty strong for the rest of the year, and also that probably Ontario is probably not going to achieve what they set out for, which is fair enough. But hopefully, I'm hoping that when we do get to Q4 and we do get that World Cup, it is very strong numbers and they do actually then get back to their old guidance previously. We'll see what happens there. I think there's a lot of unknown factors at the moment playing on the outlook, and I think management maybe took the decision. I'd love to see some clarity on the conference call. I don't think it was there. No analyst kind of really digged into it, but I'd love to see the clarity on what is the assumptions on your outlook that have changed. Is it to match the FX? Is it to go for a lower hold rate? Is it the Ontario? Are you playing it a bit safe? I'd love to dig that in a little bit more, but yeah, that's where I think that we're at the moment. One of the really standout points for me in this quarter was the B2B, 36% growth. Now, I've been in GAN for a while now, and one of the big criticisms that I always had or saw that GAN had was people always criticised the B2B. They always said the B2C was the saving point of GAN. It's what's really lifting the business up, and it has been an amazing performer, and in fact that was actually one of the key weak points in this quarter. However, the B2B, which has always been the point or part of the business that hasn't grown as much as what I think it could have done, and I wanted to see that get back to 20% growth this year, I actually came in with 36% growth. So this is way above I always wanted B2B to improve this year, but this is way ahead of where I wanted it to be. So this was a really standout point from the business. And the B2C, which was the weak part of the business, is coming off 2 fantastic years since they acquired it. But as well as that will come back strong, I believe, in Q4. So this is really positive to see here that one of the parts of the business that I really wanted to see improving did improve a massive amount in that quarter. And as management said, and what have I've said so many times, Q4 is key. World Cup is there. When you've got the World Cup, it's going to be important on the B2B platform, but the B2C, that's where we should see the bounce back, and we should see when we've seen the Euros previously and the success that drove. I think they said something like they've gone from 40,000 active accounts now to 260,000 accounts for the World Cup or something. I can't remember exactly, but they said that, you know, the expansion from where they were a year and a half ago is massive now, and we saw the benefit in Q2 2021 from the B2C platform, and I'm excited to see what happens in this Q4 with the World Cup. So that's going to be great. And in Q4 as well, they're also expanding that B2C platform, and it's also going to have a new launch in Latin America, which is going to be Mexico. So that's going to be really cool to see how that goes in there. So overall, what's my opinions with GAN's earnings? Well, I gave them a 5 out of 10. It's definitely one of the weaker earnings that I've seen from GAN. I wasn't blown away. I wasn't disappointed. I was somewhere in the middle. I looked at it and I saw a few negatives. I saw a few positives. I definitely think when you look at the long-term aims of this business, is very much still there. You know, the Q4, I'm really looking to the Q4, moving into profitability this year, which was always their aim. Even with the outlook cut, this company's still going to be growing, you know, really good rates at 20+% growth, which is insane. That was always my aim, for it to be a profitable company with 20% growth, and it's going to be doing that. So everything in the company is still moving very much in the right direction, which is absolutely amazing. But looking at the share price, it is going to have a bit of a drop off today. Like I said, it's 25% down. That's going to put it around about 150 million market cap when it opens up today on the market. That's going to put it down to a 1 price to sales ratio and about a 10 to EV to EBITDA. And like I said, you know, it's still a business here with 20% growth. That's way above the average. Really good growth there. Its profits are still on its way. There's going to be big ends to the year to be looking forward to. And the big thing is, you know, even though it's so crazy to see this going down 25% when it's already gone from $14 to $3 in the last kind of 6 months. And like I said, you know, it wasn't the most amazing quarter. It was a little bit disappointing compared to what they normally do. But we know GAN drops off earnings even when they've been amazing previously. And even though this was a little bit disappointing on a few aspects, the long-term game plan and the positives that are still building there, I thought were really impressive. And when you look at the valuation, you know, 20% growth company, we've started to ramp up profitability, hopefully by when we get in that Q4. And the valuation it's at, I still think this is incredibly undervalued, and I think that the long-term game plan is still massively here. And the only little thing I would say is that obviously the outlook was probably the most disappointing part, and that's why I think that obviously we're seeing a little bit of a drop-off today. But I think when you look at the valuation and you look at the long-term game plan, it's still very much on point here, and it's still going to be, you know, people get upset because let's say that sometimes expectations are here and the company comes in like just underneath them expectations. Now, just because it underperformed expectations in that quarter doesn't mean it's a bad company, especially if the financials last time were down here. And I think sometimes people judge a company sometimes on what's happening in that quarter and looking at analyst numbers and going, oh, it was just slightly below what analysts were expecting here and here, it's a bad company. That just means analysts got it wrong. When you look at the long-term picture here, and I see this still with GAN, I've got a really good valuation. It's still going to be growing at 20%. The path to profitability is still there. It's still not changed. And even though potentially it's a little bit below what analysts were hoping for, I never said that. For me, I always said that 20% growth a year, start to move to profitability, clean balance sheet, got all the catalysts in the back end of the year. For me, I look at this quarter and go, there's nothing changed with the business. Sure, the numbers could have been a little bit higher than what were delivered, but the opportunity here in the long term, I still think this is financially performing very well. So yeah, I was okay with it. I wanted the numbers to be a little bit higher than what they were, but the long term aim here is fantastic. And let's not forget, you know, previously there's been some fantastic quarters as well, and the valuation is, you know, so cheap. For me, buying wise, I guess I think a few people were thinking, am I going to be buying? The only problem I have with GAN is that I have quite a big position already in it, and I don't want to make it in a crazy big position. So I have to be really selective when I do buy GAN. I'll be straight up with you. I have bought GAN, I think 2 weeks ago. So I have had a recent buy. I probably will continue to buy GAN at some point in the next 3 months. I'll probably be buying that at limited times though, because I don't want to make it a crazy, I don't want it to be, a 20% of my portfolio. But if I can nibble away just to bring the average down, I will do, because I still think everything's going to plan here. So yeah, I probably will buy at some point. I don't know when, but yeah, I'm still planning to hold. I'm still bullish on it, and I will buy probably at some point anyway. So that's my review of earnings of GAN. Like I said, I thought they were okay. Not obviously a bit disappointing, but they weren't as terrible as what I think the share price drop is. I think it's a massive overreaction today. So yeah, that's my thoughts anyway, guys. Hope you enjoyed it anyway, and I'll catch you in a bit.